everybody, it's Maureen Lein, your local lender rate, here with this week's Mortgage Minute. This is where I break down what's happening in the market and how it impacts you. So today is Wednesday, November 19th, 2025, and I'm taping this around 12 p.m. Central Time. And the reason I let you know is because we've got a very active day in the markets. This afternoon, we're going to get the 20-year bond auction at 1 p.m. Eastern, followed by the Fed minutes at 2 p.m. And these should be especially interesting because the last meeting was divided. We had one voter push for a 50 basis points cut, while others wanted no cuts at all. And the tone of these minutes could really move the markets. But honestly, the headline event, which is going to have the biggest potential to impact both the stocks and the bonds, is NVIDIA's earnings, dropping today after the bell at around 4 p.m. These earnings have been a major market mover all year, so we're watching this closely. Now over to housing. The Mortgage Bankers Association reported last week that purchase applications fell 2%, refinance applications fell 7%. Rates were essentially flat around 6.375%, which is still about 0.5% lower than this time last year. And even though weekly numbers have softened, year-over-year activity shows real strength. Purchases are up 26%, refinance is up 125%. The NAHB Home Builder Sentiment Index for November, that rose 1 point to 38. Now, it's still contradicting territory since anything below 50 is considered negative, but this marks the second month in a row of improvement, which is a great sign. Here's what it's showing. Current sales rose 2 points to 41. Future sale expectations dipped 3 points to 51. Still in expansion, buyer traffic ticked up 1 point to 26, which is still weak, but improving. Now over to the National Association of Realtors, who forecasts that home sales, which has stuck near 4 million annually for the past 3 years, could rise 14% next year, reaching about 4.56 million. Still below normal levels, but a meaningful increase in activity. They also expect mortgage rates to average around 6% next year. We also got the rental update from CoStar. So multifamily rents fell 0.3% in October and are only up 0.8% year over year. That's about half of last year's pace, and the declines over the last 3 months are some of the largest that we've seen in 15 years. This matters, guys, because shelter costs are the largest part of inflation, and softening rents help push inflation and eventually mortgage rates lower. On the employment front, ADP's weekly data showed an average of 2,500 job losses per week over the 4 weeks ending November 1st. Still soft, but better than the previous reading of over 11,000 job losses per week. We also saw WARN notices jump to 39,000 in October, the highest since 2009 when you exclude COVID distortions. Now, these are advanced notices from large companies about mass layoffs, and another sign of the market cooling. So the initial jobless claims report, which is about 3 weeks behind, showed 232,000 new claims, up from 219,000. Continuing claims climbed up to 1.96 million, which is one of the highest levels since 2021, suggesting it's getting harder for people to find new jobs once they're laid off. And finally, tomorrow at 8:30 a.m. Eastern, the September jobs report will be released. Given the soft labor data we've been seeing, there's a real chance it comes in weak. And if it does, bond markets could rally, which then may help ease mortgage rates. That's your Mortgage Minute for this week, everybody. Thank you for tuning in. And as always, if you like what you hear, please like, share, and subscribe, and we'll see you next week.